I'm a Pristine trained trader, and most of my day I'm spent trading and doing that in a room in Pristine called the Pristine Method Black Room. I want to talk today about today's market volatility, and I want to go over some things about the market specifically and how we look at it. And you can see on the screen here, it has a little blurb here. If you listen to the news and reports, you hear the market is described as being volatile and whippy and unplayable. It's actually quite playable, and this is a very good thing that the market is perceived like that because it opens up many more possibilities. We're going to take a look at what it means volatile has had, what effect it will have, and how it can be your friend in trading. We believe that the only way to understand the market is to understand technical analysis, understand charts, and just read price action as it goes. It's something that's fairly simple to learn, although it does take some practice. I want to take one slide just to tell you who we are. At Pristine here, our founder is Greg Capra. He's the CEO and creator of the Pristine Method. Greg's been in the business over 20 years and is, the trusted name out there. He's author of various seminars and trading and investment books, and he's a 6-time winner of live money show trading challenges. And most importantly, he's an ongoing coach to our educators and students as well. He's available to coach every Tuesday night he coaches, and he's available also in the Pristine Method Black Room on Fridays. Okay, his book is great. It is a great book to read. His most recent book is a very advanced book. It's a great read. Thanks for the comment. I am Paul Lange, 15-year Pristine trained trader investor, and currently the head moderator in the Pristine Method Black Room, and head of the research department, and author of those various classes that you can see there. And something I just want to point out real quick that we're really proud of is this little award over here from Trader Planet. For 3 years running, we have won everything we've been nominated for: best education, best room, best letter. So something we're very proud of. It's something that's voted on by the trading public. It's not just awarded randomly. And I want to remind you that trading or investing, the standard disclaimer, you can lose money trading or investing, and it's all about understanding your risk and how to handle that in trading, something that we're very big on. All right, let's get started here. What is volatility? Well, here's a definition that may or may not help us. There's a standard definition, and that's the trait. Can you guys see my arrow, by the way, on the screen when I point to things? I just want to make sure because I haven't used this camera like this. So you guys see the arrow okay? Yes, great, okay. I don't need it now so much, but I will when we get to some charts I'm going to show you. The trait of being unpredictably irresolute. The volatility of the market drove many investors away. Okay, it's interesting. Definition from Investopedia involving stocks. A statistical measure of the dispersion of returns for a given security or market index. Wow. Volatility can either be measured by using the standard deviation or variance between returns from the same security or market index. Commonly, the higher the volatility, the riskier the security. Risk is a funny word when used in that way because I'm not sure exactly what riskier means. Since you can control the money that you invest or risk on a trade, in a sense, nothing ever has to be riskier, correct? You agree with that? Sometimes I think riskier, people use it to mean that there's less chance for success, maybe, but it's kind of interesting how that word is used without being defined. Guys, has the market been whippy lately? Let me get your answer to that question real quick. What do you think? Has the market been whippy lately? And I'm going to leave that undefined, just a general comment out there, yes or no. Whippy, has the market been whippy? Which I guess for most people would probably be similar or tantamount to being volatile, right? Being volatile all over the place. This is the daily chart of the QQQ. Now the QQQ, for those of you that don't know, is it's an ETF. It's a proxy for the NASDAQ 100. We could also look at the SPY if you wanted to. It would look pretty much exactly the same, though. That's the ETF for the S&P 500. I look at both. I chose the Q. I normally follow the Qs during the day. This is the market as of today at some point. I snagged this at lunch real quick. I didn't have a lot of time today. It was a busy day, but I just snagged 2 things real quick on the market, so I could throw these in here. These that I'm pointing to here, these arrows that you can see coming on the screen, these are what we call pivots. They're inflection points. They're points where the market has reversed, and you can see the pattern on here is what you would call whippy, volatile. This is a daily chart, by the way. This is a daily chart. So every one of these bars represents a day. And you can see as we go on here, this rally came short of this rally. This decline came all the way back to the prior decline. All of a sudden, we come back and we retest that decline. We stop at the prior highs, and all of a sudden we make a higher low, and then we go to higher highs, and we come back down to here, and then we make a lower high, and then we make a higher low, and then make a lower high, and then it looks like we're breaking down right here. Another question for you. Is that what we would consider a breakdown? Hang on to that answer. Think about that a minute, but I want to get to that in a minute here, whether or not that is considered a breakdown on the daily chart or not. A very important point, because without understanding what it means to break down or break support, you'll find that a lot of traders end up exactly on the wrong side of the trade. And guys, this is a common thing, but just another quick question. Have you ever, like, maybe shorted something or got out of a long position and you look back and you said, son of a gun, that's like exactly when I should have gotten into the position long? Does that ever happen to you? Because the market is tricky. Hey, Jack Frost, I know you. The market's tricky in that it's not really an accident that happens. It's a very specific technical reason that happens, and you're not alone. The moment that you and a few 100,000 people like you decide it's time to get out, that's the moment the market turns. And a lot of it has to do with the definition of what it means to break down or break support. It's a very important topic, and I'm actually going to go into that topic in some decent detail in just a few minutes. It's something we're going to go over here today. You guys want to talk some about the market? Exactly what it's done, what it's going to do? It's always a popular topic, right? Personally, I like to trade, I do trade the market some, but I like trading equities as well. But even trading equities, most of the time, don't we want to know where the market's going if we're trading equities? Isn't that true? For most trades, guys, right? Most of the time we want to know where the market's going. It's helpful. It's like, you know, the mothership, the tide that rises, the tide that lifts all boats. So if you're swing trading in this, there is swing trading possible. It's kind of what we call guerrilla swing trading, in that you're never getting these rallies that take you to new highs, right? You're never getting that really nice breakout type of thing. And therefore, swing trading over this period of time, which goes back, you're seeing a chart that goes back to the beginning of March, has been a little difficult situation because there are moves in here, but you can see you can get easily shaken out of this. A lot of these moves are not very complete. They run, we come back, we go higher. It is what we would call fairly sloppy, volatile, or whippy, okay? How about, though, would we consider that a plus or a minus for intraday trading? And also, volatility, what does that look like on a bigger time frame? A lot of being volatile has to do with what time frame you're looking at. And the other question is this just talk, or is this something we can actually play? And we're going to take a look at that in just a minute as well. This is a weekly chart of the QQQ. Let me go back and show you that again. There's the daily. Here's the weekly. Would you call this weekly a volatile, whippy disaster? Would you call this weekly chart a volatile, whippy disaster? No, absolutely not. You're right, Dan. Isn't that amazing how things change a lot when you move up a time? As a matter of fact, if you go back and look at this weekly chart, going back for 6 years plus, it is probably the most true, accurate, consistent, steady weekly chart there has been in a long, 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 long time. The last 6 years, that's a long time. There's only been one hiccup in the weekly chart, and that was, I think, in 2011. I don't have it on that screen in front of you there. But it's been a very, very consistent, uptrending, what we call clean pattern, you know, very difficult to mess up. If this is the chart you are trading, you could have been long for 4 years without ever needing to exit or readjust positions at all. Could have actually been adding to positions. So when we come out to the weekly chart, all of a sudden you got to look around and say, what do you mean volatile? What do you mean whippy? There's nothing whippy going on. And this is why it's very important when you look at any stock or equity that we look at the chart through what we call a multiple time frame analysis, and also what we call from a top-down analysis. In other words, I'm not going to get very bullish. I'm sorry, let me say it again. See if you can fill in the blank here. I'm not going to get very bearish on the daily chart until the weekly chart, what? I'm not going to get very bullish on the, I'm not going to get very bearish on the daily chart of the market until the weekly chart does what? Until the weekly chart does what? It at least gives me some sign it's breaking down, right? Because if you're trying to short, you know, for 4 years I've been listening to people tell me this is the high in the market, why are you still bullish? By the way, just so you know, me personally, I'm a very bearish person. I mean, by nature, I want to be bearish. And I've been just unadulterated bullish for 5-6 years because you have to, because we follow charts. So I'd be the first one to want to say, yeah, let's go bears, let's go crazy, but you can't. If you're trying to short the market and trying to catch little daily moves down on a swing basis, you're getting killed. And maybe some of you could attest to that. Not the thing to do. As long as this chart is pointing upwards, we want to look for opportunities to go long on what is perceived to be weakness. Does that make sense, everybody? That's what we call a top-down multiple time frame analysis. It's almost common sense, right? The big picture is going up. We want to take advantage of going long when we can. You know all those moments when the rest of the world is thinking everything's falling apart? That's exactly the time you want to get in, and that's exactly the time a lot of people get out. We'll look at that more in just a second, okay? Volatility, pros and cons. Well, here is an intraday chart from the market going back a while. There was a period of time where the market was just grinding up every day. It was very non-volatile for about 6-7 weeks. We just remember that back a while back. I don't know, it was a year and a half, 2 years ago. Remember that time? Just every day the market would gap up a little bit, trade narrow, go higher. And the problem then, you could say it's not volatile, but how's that helping me? Look, this was the entire period of lunch for 2 hours. The high and low of the Qs is a 9-cent difference, right? Market breaks out, it goes up 12 cents. It's a very tough situation to make money in. So one of the pros of volatility is you have movement, right? Movement is necessary if you're trading or investing, because without movement, it's very difficult to get any kind of reward. Agree? The cons are that excessive volatility can get to be a problem, and also volatility in general is a problem if you don't understand it. If you don't understand multiple time frame analysis, top-down analysis, or if you don't understand some of the finer points of technical analysis, which actually, when you understand it, dictate a lot of times right when people are thinking short, it's actually the right time to be going long. Here's the daily chart last week of the QQQ, and I want to talk about this for just a minute here. This goes back to last week. Now, this is not including the last 3 days, all right? This is going back to, we had this big day down. Was that, I get my days mixed up because we were closed Friday. Let me look at my chart here. That big day down was the 29th, which was Tuesday, okay? So this was Tuesday, this big day down, and then this was Wednesday, okay? This big day down broke across 2 bottoming tails over here, right? Everybody see that? So the question is, did the daily chart break support? What do you think? Did the daily chart break support? Yeah, 29th was Tuesday, thank you. Monday. Yeah, 29th is Monday. I'm so messed up from the 4th of July being closed. Monday. Yeah, 29th is a big red bar. That was Monday. So this was Tuesday, and then we had 2 more days last week. We'll show you in a minute. Is this a breakdown? Did we break support? Well, your answer is going to depend on what you define breaking support as. To me, to Pristine, to the way we teach the concept, this is not a break of support, because support is a general broad area, right? I mean, you can't possibly tell me that if we go 1 penny underneath this tail that you would then start shorting the market because we're breaking down, right? It's not the case. It depends a lot on the prior pattern. It depends upon what the support looks like. It depends upon how you approach it. And what we really look for is always what we call confirmed moves that indicate support is broken, okay? So at the time that that happened, we were not bearish at all. As a matter of fact, the commentary we said, and I'll show you this in a minute, actually said that prepare to be bullish, with a big caveat though, because there was a little bit of a difference. The next day, the market gapped up a little bit, and I just want to show you how you can take volatility and apply it in a positive way. Big move down, we gap up the next day. That gap up actually creates a bit of a strategy for us, okay? For those of you in Pristine, we call our bullish gap surprise. It's playable. And that right there, I want you to take a look. See that little bottoming tail right there? Everybody sees what's going on here, right? This is Monday. We had this big day down. Tuesday, we gapped up. And then that bottoming tail, of course, occurred during the trading day, right? And that little tail right there, I want you to keep an eye. This is a daily chart we're looking at of the QQQ. And I'm going to switch. That little tail right there, I'm going to switch down to an intraday chart right now. This is a 5-minute chart. And that tail was actually formed at the low of the day right there, okay? Now, that was very much a play for me. because this is a very sound technical concept. The volatility of the market that occurred didn't have to, but it did yield itself to a pattern that I recognize, I understand as being very playable. This actually could have been played here. I didn't play that one for a variety of reasons I'm not going to go into right now. It would have worked to a large extent. This one worked even better. So this is just an intraday play that day, taking the Qs long with a 13, 15 cent stop and being able to capture that move that went to a new high of the day. And I actually captured that move just trailing it after it went to that new high. I actually wanted to hold it all end of the day, but decided with that move it had, I shouldn't do that. So this was a play that, and again, this is in the Pristine Method Black Room that I am in during the day with somebody named Sammy and Robert, and we take turns being on the mic, and we're all always showing you what we're doing and what we're looking at. So there's a case where big volatility, where the world is thinking, here's the end of the market, very nice play the next day long, based on a strategy that we know and that we teach that's fairly reliable. Okay, that's what this is about to me, volatility. Now let's take a look since then. I'm pointing right here. The chart I just showed you was the daily chart that ended here, and that was, again, this is Monday, this is Tuesday, so there's Wednesday, Thursday, and then Monday and today. Now this was today, snagged during lunch sometime, you know, yeah, when the market was at the low. And the market has come back significantly and tremendously since that point. Okay, the market has come back huge from that point. All right, but at this point in time, it broke down this far. And the question is, was that predictable to see today happen? Why didn't this follow through to the upside? And I want to share with you exactly the concept we use to analyze the market, to understand whether you should be expecting this to go higher or not. And I want to show you exactly. Now, this commentary is not commentary that I did, you know, yesterday, looking back at a chart and making stuff up. This is posted into, we sent out a letter, and it's also posted into the Pristine Method Black Room every morning before the market opens, okay? And this is the chart that said, this is the full commentary on the left here, and then I just snagged out the important, no, where is this? I'm not sure what that means. I just snagged out the important. So this is Thursday, and it says, okay, we have this gap up. It says, now we turn to the hourly chart and look for a tentative hourly stage 2, and that means an uptrend on the stage 2 chart, a specific type of uptrend to be formed and continue. If that hourly stage 2 breaks before crossing 109, now 109 was a really critical area for the market. It said that if this hourly chart breaks, then we're looking for a collapse of that daily chart. In other words, if this hourly chart cannot maintain its uptrend after coming off that bullish gap surprise, then the odds are that we will see the market break down below the daily lows and continue lower, possibly beginning even a market downtrend, possibly, okay? So that's what it said back on Thursday, all right? The hourly chart was still on an uptrend, everything was fine, and the expectation is to continue higher until we don't, all right? The next day, which was Monday, because we were closed Friday, market does this, and again, the commentary is the same. It said that there was a difference, you know, on that particular morning. It's commenting about the prior day that, you know, this is actually shortable. I shorted this day because the way it opened, but nevertheless, the overall picture still is bullish because the hourly chart has not changed. But again, emphasizing that if this 2, which is now the low on the hourly chart, if that gives way before we cross 109, then the odds are the daily chart will fall apart. And then this next day we see that this is what has happened, that we gap below, but when we gap below, you got to be careful. You got to look for follow through, so it rallies back. And now we have what we call lines in the sand. Trading over 1 means there's a great likelihood that we've seen the low of the daily chart, we're going to come back and retest 3. That's exactly what it says here. If you can read these comments to the side here. And also it says that once under this pivot now at 2, say goodbye to the daily chart, okay? And that, of course, was exactly what happened today, was that we got under this area 2, and that led to that huge move down on the daily chart. This is back to today's daily chart, okay? So this is what we call a confirmed move lower. So at the time you're at the low there, it means that this is a serious move on the daily chart. However, there are a couple of big caveats. Remember the most important thing I talked about, saying you have to be careful getting too bearish on the daily chart as long as the weekly is in an uptrend. What we really want to look for, where you jump in with both feet and say, hey, this is what I want to do, is when the daily chart gives you proof that lines up with the weekly chart. In other words, the weekly chart is still pointing up. And the real, back up the truck, jump in with both feet is if we were to come over this level right here. Now that has not happened, and so far this confirms bearishness. So what that means is that I will have a bearish bias on the daily chart and on the intraday pattern until this red bar is erased or until we're over this high right here, if you can see where we're pointing. Okay. Expectation would be to see the market continue lower. I have to sit back and just wait and see how we close today because the market is just screaming higher. We've already, at this point, we've already erased the entire trading day today. Okay, we've erased the whole day as of right now, which is goes back the other way. It's amazing. So how to use this information? Well, today this whole red bar was a predictable event, something you could look at doing. And where I really like to use it is to say, to stand on guard that the daily chart is broken down, and until the daily chart is fixed, I'm not going to have a bullish bias. Now, once the daily chart comes over this level, which is the high of really yesterday, is really the key level. Once that happens, then it's all bullish, weekly chart, daily chart, no holes barred. Okay? Until then, bearish until proven wrong. All right? Does that make sense, everybody? And do you have any questions over these market topics that I went over? This is how we look at all charts, really. It's a top-down type of analysis. It's understanding, a lot of it is understanding failed expectations, it's understanding patterns, it's understanding trends, it's understanding what we call the 4 stages, it's understanding support, resistance, retracement, extension. All these things come together to paint a picture for you, and there is no one absolute thing. A common issue for a lot of people is that they will look at one thing, such as a break of what appears to be support, and that means that there's all bearishness, there's nothing to talk about. And it's not really the case. It's how you break support, is what kind of support was there, how did you approach it, and what's the first reaction after breaking support. A very common phrase that we use a lot is that it's not what happened, it's how did the market react to what happened. Does that comment make sense to anybody? It's not what happened. Stuff happens all the time. And if you keep reacting to the immediate thing that happens, you're going to get whipped around all over the place. So it's not what happens. It's how does the market react to what happened. Okay? And that could be a good example today. How did the market react to this new low? Well, this new low was fairly predictable today and yesterday. But how did the market react to the new low? Well, if it actually turns green today, what is that telling you? What does that tell you about the bearish sentiment in the market? What does it tell you about the strength of the bears? The bears finally get their way. They finally get to go beyond the low of a daily chart. And the reaction is that the bulls come in and completely trample them. What does that tell you about the strength of the bears? What does it tell you about the amount of selling compared to the amount of buying? You see what I'm saying, everybody? Yeah, the chart speaks to you all the time. It speaks to you. It's not about predicting what's going to happen. It's about interpreting every move of the market and then extrapolating that forward based on the likely patterns that we understand and we know. Okay? So when the bears have their opportunity and they lie down and go to sleep and the bulls come in and trounce them, well, we know that the bears are not strong, that the bears are not there, that the selling is already done and we're back to buying. Now, there are volatile times where you have to let things sort themselves out. But right now, like I said, this is the number to look for is over yesterday's high at this point. The close today, this is quite a rally today. I mean, this is an incredible rally today. And this is a huge showing of strength by the bulls. And despite the initial red bar today, I'm going to be neutral going into tomorrow. And actually looking to see how we react to today's comeback. And I'm going to keep a neutral bias until we have time to consolidate today's move. This is a huge move today, both down and up, and then see what happens in here. Okay? It is green now. Yeah, it's probably turning green. Yeah, we just turned green while I've been talking the last few minutes, right? Great question here. Can we apply Fibonacci to this? Well, Rajesh, we apply the concept of retracement. Again, we look at all technical concepts, and we just at Pristine, we just kind of have a precise method that applies all the concepts, and retracement is one of those. So yes, we believe in Fibonacci. I mean, it's not a matter of believing. Fibonacci is a real concept. It's just that we just use a more generic retracement concept. In other words, Fibonacci spells out specific numbers, 37.2%, whatever it is, or something like that. And that's a little silly to get that precise. But the general concept of holding retracement levels to maintain bullishness or breaking retracement levels implies bearishness is very true. So we do use the concept of retracement, although you will never hear me say Fibonacci per se. Okay? Good. Any other questions? If there aren't, I'm going to keep going on here, but let me know if you have, because I do. This is probably a good time to take any questions as you have them about market, about the charts I'm showing you. And like I said, what is really amazing is the volatility provides a great backdrop for day trading in this type of environment, right? Because we get clues from the environment inside every daily bar that gives us great ideas for what to do during the day. If you are looking to only be on a daily chart or a weekly chart, right now the place to be is more on the weekly chart and to acknowledge these pullbacks as possible buying opportunities. Okay. So again, we go through this, and I just want to show you preparation for the market is really critical. In the Pristine Method Black Room, this is a little picture of what you see when you're in the room. Right there is, where am I here? Whoops. Right there is where there's screen sharing, and that is a picture of my charts live. So as I'm talking to people in the room, they can all see my charts, just like you're seeing this slide presentation. Down here is where members can ask questions and everybody can see them. And over here is where the moderators put their plays that they are going to do. They're letting you know what they want to do as much ahead of time as possible, so you can see. And down here, there's what we call a documents folder where we put a lot of information every day. Preparation is critical for every day. Every day, I prepare a watch list based on daily charts, based on intraday charts, based on things that are gapping that day. And these are my focus stocks for the day. I'm always looking at the market, of course, but these are additional focus stocks for the day. Other moderators, the top one is mine, and this is Sammy's. He also puts a similar one out with his specific watches that he's looking at, because we're all a little different. And this is just a snapshot of my screen with, I have 8 watch lists that are my daily charts. Sorry, that didn't mean to disappear there. My daily charts, bullish and bearish, my gap list up and down, the hot list, the things that I'm looking at right now, a carry list, the things that are interesting but just have to wait some time for them. And then also just a miscellaneous list and a longer-term swing and core list. Being organized is incredibly important. Matter of fact, today, I felt unorganized all today. And it's very rare for me. I'm normally very organized, but I just couldn't wrap my hands around everything today properly. My lists were all over the place. But being organized is critical, because you have to be looking at and waiting for the plays that you want to do, and be there at the moment they're setting up the way you want them to set up. You can't be just looking around and finding things that are moving and jumping in things late, because that takes your greatest advantage away from you. So it's critical to be really prepared and organized every single morning. Okay. How do you check for volatility? Good questions here. How do you check for volatility, first of all? Volatility is simply seen on a chart. How do you check for it? You don't check for it. I mean, you see it. This is volatile in that there's not a precise pattern. We're not holding consistent retracement levels. We're not holding consistent support levels. Concepts of minor support and minor resistance are erased. That's a big thing. That's how you look for it. There is no indicator. We do not look at indicators per se. I have moving averages on the charts because they're a guide to price patterns. They're not magic. But there's no indicator per se. There's naturally things you could look at that would say things are volatile, things are not volatile, but it's all a moot point. Everything comes down to how do you make money from this, right? That's what we care about. How do you make money? So I want to see charts and understand that even the most volatile chart can give you opportunities to make money, like this trade I showed you, right? The most volatile day of all, the morning after we had that huge breakdown bar, and I'm playing long. because that's what the chart pattern said to do, right? So that's what it's all about, okay? How to create a watch list? Let me come back to that one because I want to jump to the next one. How much does it cost their software for trading? We do not sell software, Rajesh. What we sell is education. We sell the opportunity to be in this room, which I'll show you in a minute, with us, learning and understanding how price action happens. I've been doing this for 15 years, and I have to tell you, I've not seen a piece of software that would help me. We use scanning tools that show us stocks to look at, but I wouldn't know what to do with those stocks unless I understood price action. Okay, so we're not big on software for trading that makes you money, because I've never seen one that does personally. I mean, that's why I do what I do. I've been doing that for 15 years. How do you create watch lists? I create watch lists by scanning stocks. I have a universe of about 1,000 stocks I go through to look at on daily charts. I have a scanner intraday that shows me gap lists. It shows me things that are having exceptional moves during the trading day, and I continually monitor stocks in the market and pull out the ones that are giving me patterns that I recognize. Okay? Yeah, you can scan for high volatility things, absolutely. Of course you can. They're not always going to give you setups, though, right? They're not always going to give you setups. That's the issue. You're going to find things that are moving. Once they're moving, I need to know which direction they're moving and how to get into them. So for those of you that are interested, if you like what I'm saying, if you like what we do, if you like what we talked about, I'm in the Pristine Method Black Room every day. It's an award-winning room. I'm in there also with Sammy and with Robert. We take the time every day to go through and get these watch lists together, show them to you. You have access to these watch lists, and it's a great way to not only be prepared for the day, but to see what us, our professional traders, are doing. So you can take a look at that. You can get prepared every day. You can listen to what we have to say. You can see our plays as we're doing them, and that's what we think the real way to understand the market is, because that's what we do every day. So I wouldn't do anything else myself. Okay. For those of you that are interested, again, here's a quick little slide about the room, the Pristine Method Black Room. And like it says, we challenge you to find a better trading room out there. Also, the counselors of Pristine are offering you guys a great deal. If you sign up by this Friday, there's special pricing for the room, which is significantly cheaper than it normally is. And also, if you send an email to counselor@pristine.com, they're going to set you up with a free month for anybody that's here listening. That's our little gift to you, to give you a chance to get to see the room, to see how much you like the room, and to really get to understand what we do. I think probably some of you listening to me have probably been in there before. We've been around quite a while, and this room actually was a room that I opened almost 15 years ago. And we have members in that room that have been in there for 15 years. There's a handful of people that are there with me the day I opened it that are still in the room. We have another big handful of people, or two handfuls, that have been there that first year, so they're there 13, 14 years. And we have a lot of lifetime members that have been in the room and decided to sign up for lifetime membership with a. All right. Yeah, it's left that I left for questions. Does anybody have any questions? You want me to go back and look over any slides, the trade, the market, anything about the room itself? Again, I'm Paul from pristine.com. You can see it all on the screen there. If you want to email me specifically, I'm just Paul at pristine.com. Instead of counselor, you can email me at Paul, P-A-U-L, if you have a question about trading, about charts, whatever. I don't mind taking, some basic questions from people, even if you're not part of Pristine. Just send me the question, and I'll do my best to get back to you within a couple days and supply you with an answer the best that I can. All right. Any questions, anybody? You guys are a relatively quiet group. Yeah, if you go back there, SS, yes. In the room, I and the other moderators, we put out in writing as far ahead of time as possible, and usually far ahead of time, exactly the plays that we're going to be doing. You can see an example right there. This on the right are the plays. Okay. So and most of the time, 90% of the time when I'm doing a play, it's on something I've already talked about, discussed, everybody has it on their list, so it's not like it's a surprise. Once in a while, we're trading live, sometimes things come by surprise, but most of the time, you're well aware of what it is, and then numbers come out, and I continue to show you my management of the trade as we go along, okay? Is that like a free trial? Yes, it is a free trial for a month, exactly. Isn't that what it said? It's a free trial for a month, yes. What did it say? First month free, yeah, exactly. Okay. Yes, educate everything we do, Brian, good question. Is there educational material explaining your strategies? Yes, all our strategies are very precise and defined in the Pristine method. We have seminars, actually, that teach the exact strategies that some people go on to take after they've been in the room for a while. And they teach everything that I do, everything that I've learned, everything through Pristine is taught in a seminar with a written manual, examples, charts. Yes. All right, Brian. All right, guys, my time is up. Thank you all for being here. Note the screen there. Pristine.com is our website, and check us out.